So we have our first communicator who's joining us virtually. He would have liked to be here, but maybe he'll share. He's joining live, so he can see you and you. And, oh, my mic is on. Super. Let me tell you about him, because he was the venture manager for Siemens Technology Accelerator. He has one of the highest performing venture capital funds in Germany. Their first round, their second round, always in the top percentile. Absolutely outstanding work as a venture manager. He's been in the VC space since 2000, and he's been an MD of the high-tech Gründerfonds in Germany since 2005. He's a very entertaining speaker. I was looking on his LinkedIn in the testimonials, and it said, highlight of the event. One of the most knowledgeable entrepreneurial minds. We're very excited to have him here. Dr. Alelx, can you see us and hear us?
I can see you, I can hear you, yes.
Amazing. Well, Alelx, the floor is yours.
Thank you very much. I'm very sorry that I cannot be in Liechtenstein. I would prefer to be there a lot more than being sick at home. I have a big back pain. But nevertheless, I want to talk a little bit about Bitcoin. Why about Bitcoin at the Token Summit? I think it's really, really important to understand Bitcoin in order to understand its potential very big impact on the token economy. So I'll start a little bit with history. And before I start, I have a warning. Listening to this speech might lead to significant and uncontrolled Bitcoin purchases, because I'm a confessed Bitcoin maximalist, but nevertheless open for other solutions, of course. So let's look at the history a little bit. And Bitcoin and the whole token economy is a disruptive innovation. And I have a quote from Paul Krugman, who's a Nobel Prize winner. And currently, today, we understand that Nobel Prizes are given away maybe cheaply to money printers. And Paul Krugman in the late 90s said about the internet that it's going to be not much bigger than the fax machine. So he totally underestimated the disruptive potential of the internet. And there's many other examples. So I think today, the whole token economy is totally underestimated. It's much, much bigger than even the biggest bulls think. So what's the history of Bitcoin? And I think that's extremely important to understand as the foundation. The financial system in 2008 was collapsing. You know, we had the Lehman bankruptcy in September 2008, and then there might be a coincidence, the Bitcoin white paper was published a few weeks later. So, and we learned about a very distinct link. That could be a coincidence. We learned about a very distinct link between Bitcoin and the financial system when on January 3rd, 2009, when the first Bitcoin block was mined, when the blockchain came into existence, when the system started running, because there's a very explicit reference to that very headline where the Chancellor in the UK was on the brink of another bailout of the financial system in the UK. So the statement basically that was done by the developers of the Bitcoin system was an explicit reference to a failing financial system. And I think that's very important, extremely important to keep in mind. So today, that graph is, I think, 2 weeks old. Today, we see a very similar and maybe even worse situation. This chart here shows the drawdown of the market cap of US equity and fixed income. And the drawdown we are witnessing currently is huge. It's much, much bigger. On the chart, it says 57.8 trillion US dollars. And you see the drawdown that happened in the financial crisis. That's this little blip that doesn't even reach 10 billion. You also see the drawdown in the early COVID crisis in early 2020. So the point, and I think it's extremely important to keep that in mind, the financial crisis that we're experiencing right now is much, much bigger than the financial crisis that we've seen a bit more than 10 years ago. So the reason for Bitcoin being a system outside of the financial system is much more important. I think that's very important. It's really, really important, and we see consequences of that. And that's the next slide. Money printer go burr. In the UK, they announced they would taper quantitative tightening. They would reduce the balance sheet, and very, very quickly there were huge disruptions in the financial systems. There was a situation where the pension funds ran out of collateral for their interest rate swaps, and the Bank of England had to reverse course and keep printing money in order to stop the more or less uncontrolled rise in interest rates, and of the 10-year British government bonds. So the system, I think 2 or 3 weeks ago, was about to fail. There was a situation where some of the pension funds would have run out of cash to bring their collateral. And yeah, that's in the Financial Times, it was described. And on top of that, and that's a slide from the German government, and there's many other comparable figures in Europe. We're spending not only billions, but triple-digit billions to fend off the energy crisis, inflation. We're printing money. We're printing money in order to mitigate the effect of inflation. It's like the same as if you would use fuel, kerosene, gas to extinguish a fire. So basically what's happening right now is that in a very high inflation situation, there's even more money being printed through government debt. And currently in England also through in other places, also Europe, quantitative easing, purchases of government bonds. So that's really important to understand that situation. That's what we are, and we will be in that situation for maybe a number of years. So that's the first point. The second point, what really is Bitcoin? And I don't want to be too technical, but basically it's just another database. It's a very specific new form of database. And a database, is used to store and use and process data for applications. And we know there are many different databases. And I just show all these. I don't go through these in detail. There's relational databases, network databases, NoSQL, flat files, search engine that can search unstructured documents, basically also works as a database. So there's many different ways to store and process data in a database, and the point, I think it's really important to understand, Bitcoin, the Bitcoin system is just another database, and the database is different. It's very specific. It's just and you know that it's just a sequence of blocks, and the blocks, each block contains a number of records, and there's a very specific way these records are attached to the database, are written to the database. It's on the first view, it's very inefficient. It's slow. It's work intensive, and it's basically just like a SQL database. It's just a different database. And the important point, and that's the key point, this new type of database, this other database that the Bitcoin blockchain uses, has certain properties. And these properties make it unique, different, and this uniqueness creates features that are very special. So basically, transactions are grouped into blocks. The blocks are linked to each other. That's very important, cryptographically linked. and it's decentralized. So who's involved? And I think it's also extremely important who's involved in that database, because typically, if you imagine a relational database at a bank, the bank is involved. The bank has total control, and they run the database, they can change the records, they can change the data. So who's involved in the Bitcoin universe, in the Bitcoin system? Well, first of all, it's the blockchain, the database, all those blocks that are attached to each other. Then there's software around it, and the software has certain rules, describes and governs how the whole system works. And then there's Bitcoin, the token. Bitcoin, and that's why it also fits to the conference, is just another token, special token. Then there's the miners. And the miners, what they do basically, they write records to the database. They write the blocks. And they get for that what we call block reward, currently 6.25 Bitcoin token per block that they find, plus the mining fees, the transaction fees. And the way these transactions are written, that's the whole mining process. It's the very computing and also energy intensive process. And that's not a bug. The computing intensity and energy intensity, it's a feature. It's important. We have the nodes. I have a node here. You can see it maybe here. I have a node here. And the node basically replicates the database. It copies the database, it distributes the database, and also it checks that the database is being written according to the rules that the software describes. So they replicate and check the integrity, basically, of the database. There's developers, a few developers that develop the software, actually, and then, of course, many developers that develop application solutions around the Bitcoin system. And then there's users, people who use the system, private people, companies, countries. I was a year ago in El Salvador, the first country who made Bitcoin legal tender. There's another country, maybe more following, and then also central banks. The Swiss central bank just announced a few months ago that they would be in the position to hold Bitcoin as a reserve asset. They're not doing it right now, but if they wanted to do, they could do it quickly. So that's the whole universe. So what are the properties of the Bitcoin blockchain and the software? And I think it's extremely important, and you should really recall this slide once in a while. It's transparent, it's open source. All the software, how it works, everything is totally transparent. And all the transactions in the blockchain are also transparent. You don't know the names, the entities behind the transactions necessarily, but the transactions themselves are very transparent. It's distributed and decentral. So there's no central power, no central entity who could decide, I don't like that transaction, I reverse it, I reject it. And that's one of the key differences to all the other token, or most of the other token systems, or other blockchain solutions. In almost all of these cases, there's a central entity, a person, a small group that can change the records of the database. No central control. It's censor resistant. So if a government said, I don't like that transaction, they could not enforce it. No one can change it. And that's also a key difference to other blockchain solutions. Writing new blocks is very competitive. It's computing intensive. And it's very good because adding records, making it very computing energy intensive, very intensive, prevents from miners colluding and changing the blockchain. It would be extremely costly to change records that have been written to the blockchain a year ago. It's practically impossible. New blocks are rewarded. Bitcoin software can be copied and reused anytime, and that has been done. There's at least, I don't know, in the tens, 20, 40, 50 what they call forks, copies of the Bitcoin blockchain that are more or less all worthless. All the copies of the Bitcoin blockchain all together have a value which is less than 1% of the value of the Bitcoin network. And that's really, really important. The number of Bitcoin is limited to 21 million. Currently, a bit more than 19 million. And that's a very, very important property because we've seen it in most of the other solutions, that even if there's a limit, it could be changed. And it will be changed. It was changed in many cases. And that creates a very unique property for the for the Bitcoin blockchain. And what's also very important, it's not attached to any regulation. So I don't mean that a country could not regulate the usage of Bitcoin, but the point is, and I think it's very important, the person, the group, the people who invented it are anonymous, so they're not. I mean, the development of the system is not attached to any legislation, because no one knows who did it. What does it mean for Bitcoin? Digital scarcity. And I think it's important to understand, so far in our human existence, only physical things have been scarce. And now, for the very first time in human history, a digital good is scarce. And what do I mean by that? The Bitcoin token is a digital good, and it's scarce. It cannot be copied. And that's what the Bitcoin mechanism does. Some people also call it absolute scarcity. Bitcoin is the only element in the universe that's provable limited. So there's lots of gold in the universe, lots of copper, iron, and all the elements are there in almost infinity. And Bitcoin is the only element that's limited. Cannot be inflated, can be easily transferred, and it's very easy to transport it because it's not physical. It can be subdivided, small part. There's no counterparty risk, and that's important in context of the financial system. Now, there's no middleman who has to work, who has to do his or her job in order to make the system work. And it's outside of the financial system. It cannot be manipulated. And therefore, and I think that's the first very important point, it has superior properties as money, as store of value, and also as payment. Superior property as money. For the first time in human history, we have a good that is the best money we can think of, because it's not controlled, cannot be manipulated, cannot be abused by anyone, because the system runs totally independent. Store value is very important. The US dollar has lost 99% of its value in the long run in the last 100 years. All fiat currencies more or less have gone to zero in the long run. Fiat currencies are stable in the very short term from day to day, but they guaranteed lose in value in the long run. And currently, with like 10% inflation in the Eurozone and in many places in the world, the fiat currency loses half of its value in 7 years. That's a lot in a very short time. And Bitcoin in the short term is a bit volatile. By the way, less volatile than the 30-year UK government bond this year. 30-year government bond has lost more value than Bitcoin this year. But in the long run, because it's limited, it's gaining value. So the potential of the Bitcoin token, in a way, as it captures the store value of other asset classes. And we currently see, you've seen the chart before, that many asset classes lose value and also lose their store value function. Because of higher interest rates, people don't spend their money on bonds, on stocks, negative real interest rates, and real estate. So the potential of the Bitcoin token is to capture parts of that store of value function of the other asset classes. So then the potential, that's the next slide. Currently it's 400 billion US dollar. It could be much, much bigger. That's just the store of value function. On top of it, and that's the link to the token economy, the Bitcoin system is not just a token. It's a protocol very comparable to the TCP/IP protocol. And people also call it Bitcoin is the Internet of Value. And the only difference really is that it's young, and there's Bitcoin, the token, the currency that's attached to the network. And you see on the upper side of the slide, you see big houses, Amazon, Facebook, Google, and so on. Big ecosystems were built on top of the internet. And we're currently seeing on top of the Bitcoin network, not houses as big as Google and Facebook, but also small ecosystems on top of it. And that's the second dimension. And I think it's really important to have that view. It's not just store value. It's a network, a technology foundation where other solutions, other networks will be built on top of it. So the other blockchain solutions, they might have properties that Bitcoin doesn't have. So that's the whole topic of the summit, smart contracts, decentralized finance, NFTs. Potentially, and I think that's why it's very important, and that's the link between the token economy and the Bitcoin economy, the Bitcoin network. Potentially, the Bitcoin system could integrate those functions, could integrate smart contracts, DeFi, NFT within the Bitcoin system. And the argument would be it's the best blockchain because it's the only true decentralized, uncontrollable system which cannot be manipulated. And just recently, we've seen publications around the Taro add-on functionality of the Bitcoin blockchain. The Taro allows, on top of the Lightning network, which is a second layer solution on top of the Bitcoin network, the Taro solution allows to issue token and stable coins within the Lightning network. And the advantage really is that the token and the token, stable coins, token economy, everything will be tokenized, will sit on top of the best blockchain solution, the only true decentralized, Bitcoin blockchain, which has unique properties compared more or less to all the others. So the point really is, from a token economy view, I think it's important not to see Bitcoin as a competitor. Maybe it is, but I think that's the wrong perspective. The right perspective, I think, is to have a view on utilizing the Bitcoin blockchain, the first layer, the second layer, Lightning, and all the add-on technologies that are being built to utilize those to support the token economy. And issuing a token solution or doing business based on a token economy, I think it's mandatory to look at the Bitcoin blockchain and evaluate if the Bitcoin blockchain really could be supporting the token cause, the token economy. And the case for it is really that the Bitcoin blockchain really is in my view, the best, the purest, the clearest blockchain solution. It cannot be manipulated. It's open source, it's decentralized, and so forth. And that's the impulse I want to give to the conference. Look at the Bitcoin blockchain from a token economy view. The price has fallen this year a bit more than, I think, 50%. Many people have said Bitcoin is dead or cryptocurrencies are dead. And my personal opinion is, yes, you're all wrong. I think it's huge. The potential is huge, especially in the current financial environment. And you've seen the chart. I think we're in the biggest crisis in the last 100 years because the drawdown of the asset prices is huge. And it will be bigger because interest rates will not come down. And if they come down, then inflation would go through the roof, which is already going through the roof. So I would like to end with a citation from Mark Andreessen, Software is Eating the World, and I adapted a little bit, opportunity and conviction. Opportunity and conviction are eating the world. There's always opportunity regardless what's happening. And if you see an opportunity, it takes conviction to really follow through, especially when you hear all the critics. Thank you very much. And if there's a room for questions, I'm open for questions. Thank you.
Excellent.